Hey, welcome back, everyone. Tom from Park Avenue Trading, your chief dealer, keeping you sane in insane markets. And we got some macro news back in the marketplace for us that we got to really pay attention to this week. We got Fitch that just downgraded France's credit rating, and the euro is on notice, right? Because since they're part of the European Union, the French bonds are going to have effect on all of the euro conglomerate bonds. So we have to really be careful with the euro dollar coming up. With the euro dollar stuck at some key levels, we got sterling dollar trying to break out, testing the resistance, and the yen pairs are definitely on the move. So this week's Forex setup could get wild, and we're going to break it all down for you. So right now, Fitch downgraded the euro, actually downgraded France from AA minus to A plus, citing rising debt and political instability that puts fresh pressure on the euro. Okay, it didn't really filter into the marketplace on Friday, but that's definitely a piece of economic news we're going to want to keep. We're going to want the technical levels are going to become really important on the downside because of this. Hang on one second. Let me get my cigar. All right, here we go. So now you got to remember that Moody's also downgraded the U.S. debt. So the G7 itself is getting downgrades because the spending is insane and the GDP is not there to match it. So the whole G7 is in trouble. So you got six of this and a half dozen of that, right? So right now, technically, the euro resistance is at 118.30. That's the high that's been in place for quite a long time. So let's break it all down. Let's get into the charts. Let's check out, make sure we know what we got to look out for this week. So this is a 4-hour chart, but we'll work with it for the week. The resistance sits right here at 118.35. Right now with that news, if the euro breaks that with this news, then it's going to 119. If it can't break this, if it actually starts to falter, and the point that we got to watch is really this week is the 116.20 level. If that level goes, we're opening up a drive down to like 115 and a half again. And that's changing the structure of the marketplace for the euro dollar. So we left it on Friday when we look at the US dollar index. Uh, it's really basically US dollar index is caught in a channel right now. It's really tight channel. We look at it's basically, I would go here and we can go down to right. Actually, this was the low that needed to hold, but it broke down. Now it's just slightly riding on support right now. This is all dollar yen. If dollar yen turns back up, this could turn up, and then that would be putting pressure, downward pressure on the euro dollar to like this area right there, the 116.60. That level goes, look where it opens up to. It opens up way down here to 115.77 on like a longer term basis right there. So you got two important key points on the week. This is 6-hour chart, but you'd find the same on the 8. But really short term, this is an important level. As I said on this chart, the first warning level would be this 116.20. That level went, then you could start to say that market structures change because of this downgrade. Maybe, now it's going to affect all of Europe, because as we just said, France is in the European Union. So Germany's going to be on alert, all the other countries, everything's going to be on the alert, and that could actually start cascading the euro dollar down, but it's not happening yet. So we just gotta be prudent. We can't just jump into something. We gotta wait for the market to confirm it, right? So make sure you get in my daily analysis because I will be looking deeply into that. If we come over to sterling dollar, where the heck is sterling dollar? That's dollar yen. Yeah, I'll throw dollar yen up and then I'll throw over sterling dollar itself. Okay. Sterling dollar main resistance right now for the week is 136. Hasn't been able to overcome that. Now, some people are saying that it's leaning bullish. I think it's neutral. I don't think it really is bullish. I think that it's all going to depend on the short term 135.50 to hold. If that goes, it's breaking down towards the 134.80 again. Now, in order to show any type of strength, it needs to definitely get up through the 136 level, needs to hold it and get through 136 like 30, and then you're opening up a path to like really just 137. All right, so there's not a full-blown bullish tone to it, in my opinion. All right, so this is a key point right here. Now, for the weekly, let's go over to an 8-hour chart. Let's check out the 8-hour. Let's go 6, and then we'll just make it 8 hours. Okay, so we're looking at the 8-hour chart right now. You can see the peak, the 135.98 down to the valley of 134, say what? 134.90. So this is the important, structure right now, even for the week, because it starts off like what direction we're going to go on the week. Now we could use straight 3-bar harmony on it, but if we look at it, right there's the resistance I've been saying, 136. Main support is really, I'm going to take it down to here to this, could give it a little skid, say 134.84. If that opens, if that breaks, you're looking back at 134.22 again. I don't think the cable is going to fall as much if the euro dollar turns because it's outside of the union, but it's not. Britain in any shape or form is in great shape. You got protests happening over there. You got a government that's just really wobbly. You got the rise of Nigel Farage. You got a lot of stuff happening where the people have basically had enough of the government not listening to what they want. Europeans, once you get Brits, like I mean, if you saw the rally this weekend for Tommy Robinson. There's a lot of people showed up, so it's been a change, a sea change in opinion over there. So we got to keep an eye on that because the question is Britain headed towards a civil war? Is it possible? I don't think, I'm not talking about guns and stuff. I'm talking about, political upheaval. So that in the long run would help the pound. Um, but in the short term, it could actually hurt the pound. So let's go on over to good old dollar yen. Dollar yen is the one. It's very, very interesting. It's really in a range right now. Dollar yen. Okay, if we go really, the main peak to valley is here. Right, let's throw it up. Let's use it. Oops, gotta grab it. Peak to valley is like 149.10 and 146.36. So it's actually tracking in between the peak to valley. Um, it's in a neutral state. Look, it was in a slightly bullish state up here, and now look at this. It's just turned completely neutral. It looks like an echocardiogram. It's not really doing much. But we got to keep our eyes to see if yen weakness continues. The resistance right now is 148, like 30-ish. Support right now is 146. If we lose that, we could see a sharper yen rebound. And we got to keep an eye on Japan. Any hint of Bank of Japan intervention could spark huge volatility. Now, they haven't, I've talked to some banker friends of mine. They have not been in the marketplace checking prices. There's just an inkling that they are going to check prices. They got to make it look like, they're concerned with the yen's rise. I don't believe they are concerned with the yen's rise. I believe they want a weaker yen, especially with the tariffs imposed on them. I'm thinking they want a weaker yen so they can, uh, sell more. They got great cars, they got great electronics, great cameras, so they wouldn't mind taking a hit in the currency in order to actually sell more and keep the economy rolling. So that's just my personal opinion on it. But as I said, I talked to some old banker friends of mine that are still on trading desks, and they said they have not been checking prices, but they're starting to believe that they will. And that just by them calling a bank and asking for prices will create tremendous amount of volatility without even doing anything. Just by calling up, you know, Chase or any of the big banks out there. And I don't even know who they are anymore. JP Morgan Chase, calling them up asking for a level in dollar yen, just a level will set the traders off. And they'll sell dollar yen thinking that they're going to intervene. or they'll put that they will sell it and then actually state that the Bank of Japan called us looking for levels in dollar yen, and guess what will happen? The rest of the market will jump in, and guess what? They got a really good position on. All right, let's move over to good old sterling yen. Sterling yen. All right, right here. All right, so this was levels I gave out for the trading room that still here. Good. Minor support 199.28. Break below that is actually cascading it down to like 198.67. So that's the support short term. All right. So if we go over to, let's go to the weekly and check it out. Let's use a weekly on this because we popped up through this top. Now we would need continued movement above 200.63 to actually show that, yeah, it's definitely kind of moving higher. Now, that is again going to depend on dollar yen. If dollar yen continues its rally, yeah, sterling yen can go higher. Okay. But it's not really due to the sterling, it's due to the yen weakness. All right. So we got to keep an eye on dollar yen as always. So we did get a good punch through. But, let's move this out of the way. And we did close like right near it. So, all going to depend on the open and dollar yen. If dollar yen catches a bid, it could rally uh, sterling yen at 200, say 6201, and then we have to have a new look. That's why you'd have to need to get into, the daily analysis that I do because I give the points out, the reversal points. And dollar yen, I don't even know what the last signal I had was. Um, I'm thinking. So dollar yen is still within this range here on the weekly. Um, I didn't really get a signal in dollar yen on Friday. I thought I saw a potential sale signal, but uh, I got to go back and look. I will update you on the tomorrow. I'm thinking at a sales signal at 147, like 45. Let me look at the hourly. Let's see what happens. Let me check the hourly out. I don't want to just say I'm thinking and blah, blah, blah. Let's see what happens here. Uh, yeah, it didn't go through. So it's the 147.45 short term. If that breaks, it's trading back down towards, 146, 147, the figure 147.10. I don't see much slipping there, but it could drift a little bit lower. But however, on the conversely, if it takes out this top of like 148.10, then it's going to rally like 148, like 35.40, and potentially even up towards the 148.80. So the key point in dollar yen short terms that 147, say 45-ish. The support down at 147, the figure. Overall long-term support in this thing is if we let's go to a longer term time frame. Let's go towards the weeklies. Let's crunch this down. It's 146.25. Okay, and of course the resistance at 151. All right. So dollar yen, and if it does rally and it continues to rally, has room to get to 151.90. And again, come into my daily stuff, and I'll go over the points where I'm looking to get long or short or whatever. All right. Let's look at euro yen. Let's go over euro yen. All right. So 4-hour chart. All right. So resistance short term 173.43. Uh, Support 173, the figure. All right. So let's go to the weekly and see where we are on the weekly. 1 week. All right. We haven't taken out this top yet. 174. We attempted to last week. So the real support on this thing is way down here at 171. Using 3-bar harmony. 1, 2, 3. Right here. The resistance is actually this recent top that we have right there, 174. So, looking at it weekly, we get through 174. It's showing some strength to where? Well, let's go back in time and look. We got this high bar, we got this close right there. Since we are beyond this close, okay, that would act as the first time short-term support. Like I'm looking at the high bars close right there, 172, like 20 would be the first short-term support for the week. And, if you look at this close right there, 174.22, a break of that could lead us back up to 175.33. Okay, so that's what I got going on for the weekly forecast. Make sure you like and subscribe. Leave some comments for me, please. YouTube loves the comments. They love the thumbs up. Link in the description for yourself for a free video and ebook series on price breakouts. And I'll see you on Monday's update. And remember, always enjoy the party, but dance near the door. Cheers.